So hello guys, welcome back to our third video of our market structure. Not market structure, but overall technical analysis. This is a series. If you watch this whole series, you won't need any other course regarding to technical analysis. So this is the part third, in which we will study about what's fair value gap. From the name, it's very clear that when the market is in a range like a fair value, when the buyer and sellers have accepted the value of the price, but when it escaped that range, so it create a gap, and we call that gap as a fair value gap. So there are two types of fair value gaps: one in bullish scenario and other is bearish scenario. As you can see here, we have a classic textbook example of what's bullish fair value gap. So it must be three candles. So you can see that the gap between the first and the third candle, we call that whole area as a fair value gap. So as you can see here, as this box, like from the top of this first candle to the bottom of this third candle, we can call this area as a fair value gap. So for the bullish example, this is bullish fair value gap, and for bearish, it's the opposite. Like when we are going down and the first bearish candle, the gap between the first bearish candle and the third bearish candle, we call that as a bearish fair value gap. So theoretically, it's very easy topic, but like finding these levels and contextualizing this on the real chart is where the real skills come into play. So we will move toward a real chart example. So before heading to our live chart example, I must tell you the most important thing about fair value gap, that it is incorporated with order block, and that's how it actually makes sense and works. So without that concept, it's not so efficient. But before heading to our order block episode, I must give you some of the concept about fair value gaps, so you might not get confused at that time. So yeah, now we will move to our chart example. Here, as you can see, that we have a bearish fair value gap, the gap between the first and third candle, the classical bearish fair value gap, and a strong fair value gap. If you see here that the candles are strong and the sellers are showing interest, and after that we didn't have any good fair value gap to get marked, and after that we move to a range. So now let's move forward, and here, let me, it got made so very so now, as you can see here, that the first candle and the third candle, there is a gap, and we can call this gap as a bullish fair value gap, and this is actually a stronger fair value gap, because the logic behind this is that the third candle is stronger and the buyers are showing intent to move price even more higher. So it's a bullish fair value gap, and these kind of fair value gap are less riskier than the other that I will show you. So betting here is a good bet overall. So and now I will tell you that there are two ways to enter on the fair value gap. One is on the EQ of this fair value gap. We will take our fib and mark our 0.5, and we can now place our limit order on the 0.5 and place our SL just below the fair value gap, and can target at least the high, which is almost 5.55 R. And we can also, another limit order we can place is that we can place our limit order just on the top of the fair value gap, which will reduce our RR. As you can see, this is only 2.69 RR and this is 5.55 RR, but it will make sure that our limit order get tapped and we get our entry into our trade. So let's see how it goes. And it get tapped, the first limit order get tapped on the first candle, and the second limit order get tapped on the second candle. So both of the limit orders are tapped. So the one who got more RR will have more benefit over this trade. And as you can see, we are moving upward and we smash our TP here. So overall, this is a win for the one who was having a good RR. But it totally depends on you, that if you want to if you want maximum security or maximum risk. So it totally depends on you. So after that, the price started moving upward like this. Yeah, it started moving upward, and here, as you can see, toward our bearish fair value gap, we got another fair value gap, which we can call this fair value gap as a weak fair value gap. What is the concept behind this is that, as you can see here, the first candle, the second candle, and third candle, the gap between the first and third, we can call this as our fair value gap. And this overall fair value gap will be a bullish fair value gap. And you might want to enter along here. But here is a catch. Let me fix this. Here's a case that the third candle is kind of weak. As you can see here, that it's showing that the buyers are losing interest and sellers are stepping in. So overall, this fair value gap is weak and can mostly fail. So let's see if we tap our stop loss or TP. So place our limit order on the EQ of this fair value gap to just be more safe and have a good RR. So let's see what happens. And here in the very first candle, our stop loss get hit and we got into loss, and overall the market started ranging again. But here is another thing. Let me fix this bearish fair value gap, for which we marked earlier and was waiting for that. So here, as you can see, when we got this stop loss, our price tapped just this the EQ of this fair value gap and started reversing perfectly. As you can see, let me mark it. So this is a perfect entry. You can get like the most perfect entry, and it's almost, we got almost 6 RR in this trade. So this is how fair value gaps work, and this is general idea behind what's fair value gap, what are weak fair value gaps, and what are strong fair value gaps, and how to identify fair value gaps overall. So I hope so you like this content and might have enjoyed this. I don't think so that trading is an enjoyable topic. It's really difficult and tough topic to understand. So if you like this content, please leave a like to my video and subscribe to my channel to stay tuned for my upcoming videos like order blocks. I will move forward to our fibs, teaching what are fib and how to use that premium discounts, overall the hidden order blocks, which is a very new topic. You might have not heard about it on YouTube from anyone. So it's kind of a very great edge. It can provide you a great edge over other players in the market, and overall the demand and supply, everything in the technical analysis series. And I might start a psychological series in which I will tell you what's the psychology behind the moves in the market. So also stay tuned for that. So please subscribe to my channel. And